Hey guys, SGT here. I have on the line Jeff Nielson from Bullion Bulls Canada. How are you, Jeff?
Hi, Sean. Nice to be here again.
Glad to have you. Say, it's been a lot of ruckus in the space lately talking about the paper to physical silver ratio and the gold ratio. And I know that you certainly follow that. And you've got a new article called Silver. It's all about inventories. So I want to talk to you about that. But first, I wanted to get your take on this paper to physical ratio, because my point, Jeff, has always been that, whether the ratio is 19 to 1 or 45 to 1, as Adrian Douglas's quantifiable research has suggested, or 100 to 1 or 160 to 1 or even 500 to 1. It doesn't really matter, because the point is that those who have physical silver at the end of the day are going to be big winners when this paper market implodes. What's your take?
Well, just as a matter of arithmetic, working out that leverage calculation is going to vary tremendously based upon how much physical bullion is actually around at a given point in time. So, basically every time another bar of silver gets cleaned out of these warehouses, that ratchets up the overall leverage that much further, because there's less of a physical inventory to base all of that paper leverage upon. So, that's why it's kind of a moot point. You have some commentators talking about, well, we shouldn't be talking about 100 to 1 leverage, because so much of this is derivatives and stuff like that. But it's really not material, because, leverage is leverage, and the bottom line is that the whole, paper silver Ponzi scheme is dependent upon the amount of silver, actual physical silver upon which those schemes can be based. And as that goes down, the entire, set of Ponzi schemes becomes more unstable and that much more prone to collapse.
Well, absolutely, Jeff. So now let's turn our attention to Andrew Maguire. Okay, so the London whistleblower Andrew Maguire just the other morning told King World News that the launch of the new gold and silver exchange in China will, quote, destroy the remaining gold and silver shorts.
Well, that's one of the things with this new Pan-Asian gold exchange which is being created, is it's going to broaden the market and not allow the Wall Street paper traders to totally dominate the sector to the same point they've been able to do in the past. And of course, Andrew Maguire has weighed in on this issue, talking about how this move alone is going to make the silver shorts that much more uncomfortable, because essentially when you expand the total amount of trading, what this implicitly does is it dilutes the percentage of trading represented by this, monster short position, which J.P. Morgan and HSBC and a couple of the other banks have put together between them. And so, as that becomes more exposed, it will become easier for everyone to see how meaningless that market is, because it is nothing but a paper market.
Well, absolutely. And the point that Andrew Maguire is making is that there are 320 million active customers of the Agricultural Bank of China that will now have access to this trading and will have access to this particular market through the Pan-Asian Exchange. These are people that have been locked out of the COMEX. These are people that have not been able to take part to a large degree. And these are people that live in a country where the government is actively encouraging its populace to go out and buy physical silver and gold as a hedge against inflation. Add to that the over 2 million corporate customers, and it's a big deal.
And, Sean, at the same time, what this is also doing is it's branching the trading of precious metals from strictly a U.S. dollar-based trade into also being traded in Chinese renminbi, because this exchange is going to be offering gold and silver trading in China's currency as well. And so what that does is it totally changes the paradigm for the Wall Street traders, because they can no longer simply look at their U.S. dollar-based charts for gold and silver and plan their attacks based on particular points in the chart and their technical analysis. Now suddenly there's two sets of charts, the U.S. dollar-based gold and silver charts, the renminbi-based gold and silver charts, and two separate and equal aspects of technical analysis for the traders to rely upon. And so there's no longer that one single paradigm for them to use in their operations.
Yeah, and I personally think it's a game changer. I'm wondering what your take is, because, there is the concern by some that the new Pan-Asian Exchange will be used as a weapon, just as the COMEX has been used as a weapon to essentially control the price of the metals. I don't particularly see it that way, because I don't see the Chinese government as being in the same camp as the United States government. What's your take on that?
Well, of course, if we go back in our history books, what we see is the Chinese government being a victim of the West over and over again. The Opium Wars, the silver operations that destroyed India's economy and China's economy after World War I. China has a long history of being burned by the West. And so anytime I see people speculating about them teaming up in some sort of collusive effort to dominate the market, I just chuckle because I can't see, China wanting to do any deal with this pit of vipers.
Yeah, I absolutely agree with you, and you know what? We're going to know soon enough. And I guess my point has been that I don't trust this current system. I don't think the COMEX is honorable. I don't think that what's been happening is by any means a fair and honest market, and so I don't see how it could get worse. I actually think that Andrew Maguire is on the right track, and I think this could spell the end to the gold and silver shorts. I think they're going to find themselves in a very dark box in a corner real quickly. Hey, let's bridge over to your new article, Silver, It's All About Inventories, because at the end of the day, that is what it's about. It's about physical inventory.
Well, yes, and I can't understand why some commentators in the sector choose to kind of hedge their calls in this market and say, well, we think that the outlook still looks bullish for silver, and we hope things are going to be great going forward. It's really simple with a commodity. If inventories are at one extreme or another, that variable is always what's going to dominate the equation, because of course producers and producers and consumers live in the real world, and they have only so much space available to hold these inventories. The warehouses get close to full, and they have to do something to stop that buildup, and so the only way to counter that effect is to push the prices down to the point where that inventory gets cleaned out. And then, of course, the opposite dynamic applies in the case where inventories are nearly gone. Consumers and suppliers are panicking because they're running out of the stock they need to keep their businesses going, and the only corrective mechanism to restore equilibrium are much higher prices. So when we see inventories in an extreme like this, this is a totally closed book in terms of where silver is heading over the medium term. And, of course, over the longer term.
And before we part ways here, I wanted to ask your opinion on the SLV. I think as we saw the May 1st takedown in silver, we've seen the big banks, the bullion banks, covering some of their shorts on the COMEX. But in a mirror to that activity, Jeff, we're also seeing a record number of short positions overwhelming the SLV. Have you been following that at all?
Well, in fact, I've noticed that there's been a significant amount of redemptions in SLV, and I would suggest that there is in fact a link between the covering of the short positions and the reduction of the long positions on SLV, specifically because it's my belief that SLV is directly used to fund the banksters' short operations. And so when the unit holders of SLV redeem their units, this forces the banksters to reduce their short positions because, of course, that's what they're using to fund and back the short position.
Yeah, and I think Eric Sprott is in your camp on that. And he writes on the COMEX, and I quote, since 2009, the ratio of paper silver to physical silver has increased fourfold from approximately 8 times to almost 33 times today where it stands. He says, what is the significance of this discord between paper and physical supply on the COMEX? Well, recall that over 800 million ounces traded each day in April on that market, with only 33 million ounces of physical backing it. So Eric Sprott puts the ratio at 33 to 1. But again, it gets us back to the point that regardless of whether or not the paper to physical ratio is 20, 30, 40, 50, 100 to 1, the point is that you got to hurry up. You got to get some physical silver in your possession now because time's running out to be able to get it at these prices. Where do you see prices going in the near future?
The market is so unstable now that I'm really backing away from trying to make any firm calls on prices. I had a recent interview where I was asked the same question, and after saying the same thing in response, I ventured that we could easily see silver, move up towards $75 by the end of the year, and easily see gold move up towards $2,000. But things can change so much between now and then that I don't want to, have people looking at things in that sort of a fixed, arbitrary manner.
Yeah, I agree. I had a personal message from somebody who's looking to buy 1,000 ounces of silver for their first purchase. They want to buy 1,000 ounces, and they said, when should I do it? Should I wait? Should I buy now? And, my response was I would buy 500 now, at today's prices. That was a few days ago. And maybe wait and buy another 500, at some fixed point in the future. But the point is you really ought to buy regardless of price because nobody can time this market.
Well, yeah, and in fact, I would offer the advice that you don't want to wait because it's not simply a matter of looking to time the market and get the best price when we're dealing with a situation where inventories are at critically low levels. Because, it would be wonderful if silver was, at $10 an ounce to buy it, but what if there's no inventory available? And of course, if the prices get pushed down any lower, that's exactly what's going to happen. Inventories are immediately going to become even more scarce with all the dealers, and it's going to be even tougher to buy. So, anybody, quote unquote, hoping for better prices should maybe, think about what they're hoping for, because those better prices might be accompanied by absolutely no available silver to be bought.
That's right.
So I would say to anybody sitting with some cash and thinking about buying silver, do it today. Today's a great price. A year from now, you definitely won't regret it.
Well, absolutely. And being that we're up 10% in just the past 3 or 4 trading days, I mean, we could easily be over 40 in a blink of an eye, too. And then those that were waiting and thought 35 wasn't quite cheap enough, they're going to be forced to buy at 40, 42, 45. Well, I'm going to link to silver. It's all about inventories, Jeff. Your latest article here. We're going to link below to that so people can check it out. It's a great article. And are there any final words or parting words of wisdom you want to leave for us?
Just that we're looking forward to a very exciting fall rally in the sector, and of course that fall rally could start as soon as 2 or 3 weeks from now. So I wouldn't wait to start placing your money.
Yeah, don't miss it, folks. Jump on board. This dollar's not getting any stronger as the Fed prints money. Well, very good. Jeff, we always appreciate your time. You're a good guy, and we invite people to check out bullionbullscanada.com. Links are below.
Thanks, Sean.
Thanks, Jeff. We'll talk to you soon.
You bet. Bye-bye.
Bye.
Well, that's it, guys. Thanks for watching. Good night.